Good afternoon and welcome to BizTech's Midday Market Watch. Our guest today is Jeff Halley. He's the Senior Market Analyst at Asia Pacific at OANDA. Hey Jeff, great to have you on the show.
Good to be here. Thanks for having me, Brian.
Now Jeff, before we get your insights, let's take a quick look at markets. Now the Nikkei is trading at 25,527.37. It's down 0.42. The Shanghai Composite is trading at 3,406.79. It's up 0.86%. Hang Seng is down 0.18% at 26,403.17. ASX 200 is up 0.5% at 6,572.10. And the Kospi is trading at 2,600. It is up 1.82%. Now closer to home, the Straits Times Index is trading at 2,832.97. It's up marginally 0.71%. Over at Bursa Malaysia, it's in green territory as well, 1,596.04, marginally up 1.29 points. Now, Jeff, the markets seem to be trading on rather mixed right now compared to the early morning highs. Early morning, everything was pretty bullish. What's the reason for that, Jeff?
Well, I think I can just see a headline coming out now. The US Commerce Department is going to label, it says here, 89 Chinese aerospace companies as having ties with the Chinese military. That might just be taking the edge off Asian markets at the moment because there could be some bans coming in the last days of the Trump presidency. So some nerves around that could just be taking the edge off markets. But overall, they're being driven by quite positive sentiment, emergency approval pending, apparently for at least these two initial COVID vaccines, and US fiscal stimulus talks continuing. And I think we've seen quite a decent bounce today in US equity index futures like the S&P Minis, NASDAQ 100, Dow Jones, and that's supporting markets across Asia with this sentiment, that the global recovery is in sight in 2021, propelled by vaccines.
Now, still on the US, what are key data or events that we as investors should be looking for coming out this week?
This week's a pretty quiet week, Brian. It's Thanksgiving holiday on Thursday, so there'll be a lot of turkeys being eaten. Then I expect Friday is a partial holiday in many parts of the States. A lot of Americans are going to book that Friday off and do a long weekend. Data-wise, therefore, it's a bit quiet. We have on Wednesday, we have the release of the FOMC minutes, which should telegraph their intention to ease monetary policy more at the December meeting. And we have durable goods and personal income from October, both expected to show improvement. So I think we're going to have to wait for the November data to see if this rampaging COVID-19 through America has started to actually impact on the US consumer.
Now, last week in the US and last week in Europe, and let's move on to Europe a little bit, Poland and Hungary threatened to veto the European budget of 1.8 trillion for 2021. Now, they're worried about clauses which would make them follow the rest of Europe, and that really rattled markets. Now, what about key data this week out of Europe that could move
again? Yeah, sorry about that. Again, it's a pretty quiet week. We've got market flash PMIs for November for France and Germany and Europe today for manufacturing and services. They should all remain or be very close to expansionary. We're not going to see that COVID-19 lockdown start flowing into that data just yet. But I think if those do underperform today, that might be quite bearish for Euro in the short term, because that will be the first solid evidence that these lockdowns across Europe are really starting to impact the underlying economy. There does seem to be talk over the weekend that some sort of European-style compromise is being worked on with Hungary and Poland. But again, I think the Europeans are going to be quite tough with them. You can't pick and choose what you get with the European Union, as Britain has found out. Yeah, you can't take the good bits and then, no, I don't want to do that bit either. Yeah, so And actually, both of those countries would be major losers if the budget wasn't to pass, and it also put the emergency funding pandemic recovery program in jeopardy. They are both set to receive large amounts from that, so they'd be shooting themselves in the foot. My feeling is that Poland and Hungary will be forced to toe the line, and so the market's rapidly moving past this issue at the moment.
Now, closer to home, Singapore just earlier this morning announced that the Ministry of Trade and Industry announced that its economy contracted 5.8% in the third quarter compared to a year ago. Now, that came in a lot better than initial estimates. What other key data should we be looking for in Asia this week?
Well, looking through Asia, again, it's a fairly quiet week. We've got data, and I've got my little list just off screen, so excuse me for looking away from you here. Look, we've got South Korea business survey sentiment on Tuesday. We've got Taiwan industrial production this afternoon. Taiwan's been a star over the last 6 months, along with China, as far as its recovery goes, because it doesn't have COVID-19. It's like New Zealand and China. It's just not there. They've managed to fully control it. We've got manufacturing out of Thailand coming this Wednesday. And then probably the most important number will be China industrial profits, which are due on Friday morning. I know that's expected to leap by 10.1%, but I think the danger here is that if that number underperforms, then the market may get nervous about the pace of the Chinese recovery, because even China can't completely ignore a slowdown in Europe and the United States caused by COVID-19. So that could send a few jitters through the markets. But otherwise, I think next week, which is the first week of the month, going to be very, very data heavy. US holiday this week, and it's quite data light.
Mate, thanks a lot for your insights. We've been speaking to Jeff Halley. He's a senior market analyst, Asia Pacific at OANDA on BizTech's Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology.